Okay, we got the inflation numbers exactly as we expected, as you can see over here. You got CPI at 3.4%, which is exactly what people expected. You got core CPI, which is at 2.5%. That is a little bit lower than it was last month. So last month was 3.5. This month we got 3.4. I think all good when you say, okay, we're still in the middle of the war. The war hasn't ended. The oil prices are still up, and we still have a little bit of the inflation problem. But because inflation came slightly down, and when you combine that with the revised job numbers, the jobs numbers being revised, we, I think, are safe, or the market is telling us that we are safe when it comes to rate cuts or rate hikes. So now the market is saying there's a 55.9% chance that we're not getting rate hikes in the September meeting. So we seem to have dodged a bullet. And I'm just going to refresh this now. The reason why I'm refreshing it is because things are changing so fast because it's CPI day that, let's see what happens. No, so now you see, now it's 63.9%. Now the market's digested the inflation numbers. It's 63.9% chance that there's going to be no rate hike at the next meeting, which is, I think, correct. And I think it's correct because of the inflation numbers, but I also think it's correct because of something else. You remember that there has been an intervention between the US and Japan around the weakening of the Japanese yen. So when you look at the Japanese yen against the dollar, what you can see is that it was weakening a lot. And then there was an intervention that was done here by the Bank of Japan and Scott Bessent. Do you remember that Scott Bessent wrote that note, which I think he wanted reporters to see on that piece of paper, which said buy JPY USD or USD JPY, buy $10 billion of that. And that intervention basically strengthened the yen slightly to here, but now the yen has basically started to weaken again. So here's why I think we're not really going to get a rate cut or rate hike in the next meeting. If they hike the rates on US dollar deposits, they make US dollars more attractive, and therefore more people send US dollars and sell Japanese yen. The problem with that is that it's going to weaken the yen even further. Now, if the yen weakens even further, the Bank of Japan will also have to raise rates. And if the Bank of Japan raises rates, the problem is that we could unwind this Japanese cash and carry trade, right? So, long story short, I think that we've managed to avoid another rate hike. I think that Scott Bessent will be sitting next to Kevin Walsh and saying, look, I don't care what inflation is doing right now. I'm dealing with a different problem. The different problem is that if you raise rates, Japan's also going to raise rates. And if Japan raises rates, then we've got a big problem. Then we're going to have an unwind of the Japanese of US debt. And we don't want the Japanese people dumping the US debt. And so I think that this is correct. In fact, I've always said that I think that this is correct. I don't think we see a rate hike this year. I think it carries on getting managed. I think the one concern that we have, or that Trump has, not really we have, is that we're going into the midterms. Trump's going to go into the midterms. And in the midterms, he's going to go in with high inflation, because inflation is still at 3.4 and 3.5, and he hasn't yet managed to reach that peace deal with Iran. So Trump has a plan. This is Trump's plan, right? If you cannot reduce inflation, what you can do is you can cut taxes. And that's what he's saying. And he's actually doing it in quite a smart way. So what Trump is saying is he's saying, look, I want to make a new capital gains tax cut, which takes inflation into account. Okay, so how does it work? Basically, if you buy an asset for 100 and inflation is 20, then you sell it for 150. Instead of paying tax on the 50 that you made, you're now only going to pay tax on the 30 because that is adjusted for inflation. Now, let me tell you something. I think that is the most genius. I'm not allowed to tap a table anymore because it makes noise on the ears, right? So that is the most genius tax cut in the whole world. Why? Because inflation is largely a problem because governments devalue or print more money, right? And so what Trump is basically saying, look, if we devalue or print more money and your money becomes worth less, you shouldn't have to pay capital gains on that. I think that is a tax cut that I would definitely support. The problem is that if Trump thinks that this is what's going to make him more popular, then I think he's wrong. And I'll tell you why I think he's wrong. Because this is a tax cut that appeals to the wealthy. The wealthy have assets. The wealthy make capital gains. And when the wealthy make capital gains, they pay capital gains tax. The problem is that the majority of the vote is in a pyramid, right? The wealthy, obviously there's less wealthy, and then, there's more and more and more less wealthy people. And if you want a tax cut, what you need to do is you need to create a tax cut that appeals to the bottom of the pyramid where there's a lot of people. And that's where I think maybe Trump's thinking is slightly wrong. Or at least if he's doing this because he thinks that that's going to salvage the midterm vote, because he's going into the midterm elections with inflation somewhere around 3%. That said, I wish every government would do this. I wish that they would all admit that they are the ones that devalue money and that we shouldn't pay tax because they keep devaluing our money. You get what I'm saying? I mean, 𝗙𝗪𝗓, what do you think? I think that's right? That's what we should do. Anyway, let's move our attention to crypto, because I mean, we got the inflation numbers, and guess what? Just guess what? We woke up this morning and Bitcoin was still at $64,000. That means that now Bitcoin has been at $64,000 for 70 days. Actually, much longer, because if you go all the way back here, it's much longer. So 70 days, we've been at $64,000. I don't know about you guys. I wake up every single morning. I look at my phone. My wife says, my wife's not a crypto person. And she says, you're basically a slave to this number in your phone. And I mean, she's 100% right. If the number goes up and the dopamine shoots and we feel alive and we feel something, that's amazing. But that's not happening anymore, right? In fact, I'll tell you one thing. When you see headlines like this, it makes it even worse. Over the last 90 days, the S&P rose 5%, while Bitcoin fell 20%. I mean, how's that for a headline? In the last 90 days, the S&P, the conservative, safe market, rose 5%, while Bitcoin fell 20%. I mean, said differently, the S&P outperformed Bitcoin by 25% in the last 90 days. Like, on size, can you imagine? 25% in the last 90 days. And I think that brings me to the next topic of conversation, which is what I said in the thumbnail, which I know you all said is clickbait. It does feel like crypto really is dead at the moment. And I mean, it's not only about the price action, although the price action is a big part of it. Sideways movement like this in price is terrible. And to make it worse, if you kind of look at it, it is kind of the formation of a bear flag. It's going up here, and then it's going to potentially dump, and we're going to go all the way back down again, right? And so I think that this sideways choppy market is basically, when you combine that with 1010, you combine 1010, the happenings of 1010 with a sideways choppy market where no one's making money. I can tell you that no one's trading. I know this because we see the exchange derivative trading numbers. No one's trading anymore. No one is trading anymore. In fact, Binance had their fifth weakest day in the last 5 years or something like that last week. If you look at the actual metrics, the metrics actually tell a number here, right? So let's go to like noise metrics, which is like Twitter noise metrics. 𝗙𝗪𝗓 is doing that thing again, where you see let's go back there. So you see, so the interest in Bitcoin and crypto has basically disappeared. If you look at this chart over here, so just look at that chart over here. It shows you the tweet volume around Bitcoin and Ethereum. And the truth is that nobody's talking about Bitcoin, nobody's talking about ETH, nobody's talking about Solana. And I remember when we were in the previous bear market, right? So when we were like over here, yes, it was a bear market, and yes, it was really, really, really sore. It was the FTX bear market. But I can tell you that even in the worst pits of the bear market, people were still bullish. People were still like, Bitcoin is a store of value, and the government's printing money, and there's no one's there. It's like, if you look at the tweet volume is pretty much like a zero game now, right? Also you look at like Bitcoin's response to increases in the money supply, and it used to be completely correlated to the empty money supply. It's not correlated to the empty money supply anymore. It's like completely diverged from there. Also, a lack of progress on the Clarity Act. Now there's a 17% chance, even though there is a date in September, there's a 17% chance that the Clarity Act actually passes now. So that's another thing that's not on our side. And so much so that the regulatory agencies, the CFTC, is basically saying, you know what, if the Clarity Act doesn't pass, we'll still litigate. I mean, we'll still pass something. Read this. Watch this. I don't know why it's not playing.
We've been tracking this. We've been providing technical assistance and working really closely together with the House and Senate on the language. But if we don't get a bill, we're ready to go with our rules and regulations, because the American people deserve clarity. We can give it to them, whether it's through legislation or rulemaking, but we really want this to be future-proof. We want to make sure that the market participants that work so hard to build their businesses and engage in the market.
So they're basically saying, look, regardless of the Clarity Act, we'll just regulate like this. The other thing is that we've spoken about this before, but it looks like crypto is losing to the AI trade. And it's when I say losing to the AI trade, you can see that the miners, so this is a post that came out, the miners are basically all pivoted to AI. Like literally, the crypto miners are all literally pivoting their things to AI. And so I think we're at a point now where like it's safe to pronounce for now that crypto is dead. Like it really is. I mean, I don't know about you. I wake up every morning, I look at my phone, it's Groundhog Day. Unlike me, you guys don't have to make content every single day and pretend that 64,000 is exciting on Bitcoin, and pretend that the progress that is not really progress on the Clarity Act is actually progress, and pretend that you're excited about the fact that Trump is ending the war once again. It's not exciting. I got to be honest. Yesterday I had a bit of a nervous mental breakdown saying, I've been here for 70 days. For 70 days, I've had to make content about the fact that Bitcoin has been hovering in this range, right? Literally been hovering in a range between 59,000 and 67,000, and even to 67,000 wasn't even a real 67,000. For 70 days, every single day I make a show, I had to make a show about the fact that the price looks something like this, and that the Clarity Act may or may not pass. And this is basically what the last 70 days on the Clarity Act is. So I want you guys to maybe spend like a few minutes just feeling sorry for me. Like if you could, just a little like thought about how you feel sorry for me. And then you got to ask yourself, like, what the hell is Rand still doing here? Like, why is Rand still here? I mean, why am I here every single day making crypto content when it feels like crypto is dead? Like, why am I here? I'll ask myself the same question. Why don't I just take some time off, go ride my horses? And I mean, I don't need the money. I have enough money. I've been here for long enough to have made enough money to survive. So why am I still here? The answer is like pretty simple, right? And I think the chart basically tells a story. And I'll show you what the chart basically says. That's the chart. That's a chart I want you to look at. It's a chart of the Bollinger Band width, right? The Bollinger Band width usually means that there's an explosive move coming. So when the Bollinger Bands compress, you can see it over here. When the Bollinger Bands compress, like here, you can see that there's an explosive move up. And right now, the Bollinger Band width is the lowest that it's been since 2023, when we had a big move up. And so the answer is that I think that at some stage, we're going to get a big move up. And the reason why I think that is very simple. I know that bear markets are designed to test people's conviction. I know that in a bear market, what generally happens is the weak tourist hands who never understood the technology and why we're here in the first place anyway, are usually the first people to leave. Then after them, the scammers leave because they realize that the weak paper hands have left. Therefore, there's no one to scam anymore. And so they leave. And then the people with flimsy projects fall next. And the reason why the people with flimsy projects fall next is because they run around trying to raise capital. The investors that are left are much more astute. And the astute investor doesn't want to invest in garbage projects. And so the people with weak hands projects that actually do nothing basically start to collapse. Then you get into the next part of the bear market. And the next part of the bear market is those that have raised money and can't deliver a real product basically start shutting down, right? So basically you get to this point here in the bear market. And yeah, I'm just going to get a Bitcoin chart for us. Let me get a Bitcoin chart for us so we can actually look at all these different stages. And I've been here before and I've basically seen it. So, and I want you to really understand this because this is really why I'm still here. So when you go through this part of the bear market, basically what happens is all the companies that have flimsy business models, like in the last cycle, all the lending business models, they basically went under. The exchanges that can't survive start to fall apart because there's no more trading volume. And so by the time you get to this stage of the bear market, basically all of the scammers, all the weak hands are gone here, all the scammers are gone here, all the average projects are gone here, and you get to a point where the market eventually turns, and the market turns with the new phase of the bull market, and generally you've got good projects that are you've got projects that were built during this period, which basically have their birth during that period. So generally, like in crypto, the NFT revolution, that NFTs came out of a long bear market. The derivatives revolution and the decentralized DEX revolution, that came out of a long bear market of FTX, where people said, FTX collapsed. Therefore, we need a better solution, and we started to develop a whole lot of DEXs. And then in this bull market, this was, you could say, the hyperliquid and the DEX, the decentralized exchange bull market, right? So why am I still here? What am I waiting for? What is the next revolution? Well, let's start off with the fact that I've been here now since 2014, end of 2014. So effectively, I've been here for 12 years. And in the 12 years that I've been here, we have fought multiple fights. The first fight that we fought was the Bitcoin fight. We fought the fight of getting Bitcoin accepted by, let alone legislators, but first of all, investors, institutions, etc., then legislators, etc. And we were successful. And now we have this asset that has a product market fit and is now being marketed to the real world. Now we have a different fight. The next fight is the fight for private money that can be digitally spent, and that's the fight that we're just about to embark on, which is the Zcash fight, or that's a fight that we've just started to embark on. But also in the last 12 years, what we've developed is we've developed the ability for machines to transfer money between one another with immediate and final settlement. Now that's if you look at what a blockchain actually is. A blockchain really is a way for two bodies or two entities who don't know each other to meet online and transact with instant settlement. And when you add a smart contract to that, then you can define terms. And so let's go back. Let's go back and just define what this is. A blockchain is a way to transfer money or value from one person to another, where they get the value immediately and it's irreversible. And when you combine a smart contract on that, you can actually set conditions. So me and you meet online, or my agent meets your agents online. The two agents conduct a transaction. Once we put a smart contract in between them, and let's say, for example, I want to buy an API call from your data service. My agent goes to your data service in the ether, in the internet, and it pings your data service. Your data service says that will cost you $1. My agent transfers $1 via blockchain, and it's a smart contract that says, now I've got access to the open API. Right? Now, 10 years ago, that didn't exist. Ethereum was the platform which allowed, Bitcoin was the money, and Ethereum was the platform that allowed us to write a smart contract between the two machines, or the two agents. Okay, cool. So why am I still here? Let's put the thesis together. We've been fighting for 12 years, or I've been fighting for 12 years, but people have been fighting for a lot longer than me, to get the acceptance of this digital money that can be transferred peer-to-peer, agent to agent, machine to machine, without any bank or human intervention, and without actually the need to open any kind of bank account. Now, I read this article, which basically, it's actually a string of articles. This is the first article. Global AI investment is forecast to exceed $1 trillion in 2026. That's amazing. What are people spending the money on? Well, ultimately, what they're spending the money on is they're spending the money on a bunch of AI agents that navigate the data waves, the internet. Let's call it internet, even though it's not exactly internet. That navigate the internet. And as Elon says, he says AI agentic traffic will obviously vastly exceed human usage of the internet. Not even close at all. And he said Cloudflare's forecast is accurate. Now, Cloudflare, which is the internet provider, basically says humans will be a rounding error in the internet. According to Cloudflare's forecast, bot traffic will exceed human traffic by a factor of 1,000 within 5 years. That means that if you take all the internet traffic that we generate now, bots will generate 1,000 times that. So we will make up, the current internet will make up 0.1% of the internet in 5 years. Bot traffic will make up 99.9%, which, can you imagine that the internet, this vast, huge internet, which is 999 times bigger, will be 999 times bigger than the current internet, 1,000 times bigger than the current internet. Okay, but the difference between the current internet and the future internet is that these agents that are generating the traffic, and by the way, according to Cloudflare's report, there was a 1,700% increase in agentic traffic. Now, listen, hear this out. More than half of the Cloudflare traffic network is now non-human, while daily agent requests have gone up 1,700%. Imagine that we're in the world where already, much faster than they anticipated, if you carry on reading this report, that was only supposed to happen in 2027. We're now at a point where less than half the internet is dealt by humans, and the rest is a bunch of AI agents. Now let's talk about the difference between the old internet and the new internet. In the old internet, we used to browse the internet and we used to use the internet to download and to transfer data packages. Today, or in the future internet, these agents are going to be using it for something completely different. They're going to be using it to transact. They're going to meet online in the internet. They're going to, my agent is going to meet your agent. You're not going to know me. I'm not going to know you. My agent's not going to know your agent. They're going to meet and they're going to, like little ants in an ant colony. They're going to meet, they're going to exchange whatever they exchange, and they're going to move on to the next thing. That is the new internet. Okay, now, let me ask you a question. When these two agents meet, my agent meets your agent online. My agent wants to access, needs a little bit of information from your agent, and your agent wants to get paid. How is your agent going to pay my agent? I'll wait. I'm waiting. Because it's pretty simple. Either they're going to both have bank accounts, and the two banks are going to know each other, and then they're both going to have lawyers, and the lawyers are going to draft a contract, right? And then they're going to review the contract and redline the contract, and then once the contract is resolved, they will be able to do a transaction. Or there's going to be a smart contract between the two agents that says, if you give me access to the API, I will give you $1. The two agents will transact, and they will transact finally online, and the settlement will happen immediately and trustlessly. Okay, now, if I'm right about the latter, then the only way to do it without PayPal accounts and MasterCard accounts and bank accounts and settlements and interbank settlements, there is only one way to do this. And that way is blockchain. Okay, so now I'm asking you. I've been here for 12 years. For 12 years, I've fought to create a technology, a value that is accepted by governments and by investors. For 12 years, I've backed technology companies that allow for smart contracts between two machines to happen over the internet that create for final settlement, final and trustless settlement. And just as the technology finds a product market fit, do you think I'm going to leave? Especially when the potential market size is 1,000 times. And I think, by the way, I think 1,000 is garbage, because I think it's going to be much, much, much more than that. Because I think that each person is going to have a lot of AI agents, but each agent is going to transact with a much bigger frequency than humans have ever transacted. So we finally get to that point, and you realize that you're about to go through a revolution where the internet, which the most powerful network in the world, which is the internet, is about to 1,000x itself. And the picks and shovels that are going to be the custodians of the revenue of all those transactions are the protocols that we've been building. It's going to be the layer 1 blockchains. It might be Base, it might be Solana. It's going to be the exchanges. Why? Because if think about this, if you're a Chinese agent and I'm an American agent, and I am doing transactions in a different currency, I need to hedge that currency exposure, right? I need to hedge the token exposure. Where am I going to do it? Well, I'm going to do it on Hyperliquid or on Aerodrome or whatever it is, right? When I collect one currency and I want to swap it for another currency as an agent, I'm going to do it on a decentralized exchange. So we've just created the railway. We've just created the infrastructure for this 1,000 times bigger internet, right? And you want me to leave because price has been chopping sideways for 70 days after I've been here for 12 years? After I've been here all the way from, hold on, let me actually show you. Okay, I've been here from here. And you want me to leave because of that? Like, perspective. I've been here since here. Okay? I wrote all of this to get to the point where we finally, for the first time in crypto's history, actually have product market fit. And you want me to leave because of that? Sorry, guys, you got the wrong person. You seriously got the wrong person. Like, I was here. I watched Bitcoin being born here. We traded Bitcoin, Litecoin, and proof of work coins until somewhere around here. Here, Ethereum launched this thing called the smart contract. The smart contract created the first bunch of smart contracts were actually ICOs, where you sent money to an ICO and they sent you back tokens in a project. That collapsed. We then went into the second bull market, which was the whole smart contract blockchain thing. And now we went into a cycle, which is made up of transactions, derivatives, options. And here is where the machines are basically coming online. And you want me, after 12 years, you want me to give up because of that? Sorry, guys. Not me, eh? Not me. I don't know about you. Let me know in the comments if you agree with me, and let me know in the comments if you think that if you're here to stay, and whether you see the big picture. And if you don't, or if there is another picture which I'm not seeing, because I'm really open to the fact that maybe my thesis is wrong. It's possible. It's really possible that, you know, my analysis is wrong. But if it is, let me know in the chat. Let me know in the chat if you, I mean, again, just to highlight what my thesis is. I think that there's going to be 1,000 times more usage on the internet because it's going to happen with agents. I think the agents are going to transact thousands of times more than humans will ever transact. And I think that when the agents transact, because the agents aren't registered to a country and an identity document and a social security number and a jurisdiction for a court, they're going to require smart contracts to transact between them. And those smart contracts are going to have to transfer value trustlessly and immediately. And I only know one way to do that, and that's called blockchain. And I'm not the only one that actually sees this. I mean, Brian Armstrong saw it. Solana sees it. Vlad sees it. Jamie Coots from Real Vision says the blockchain thesis, AI agents automate digital commerce. Digital commerce at machine speed need machine native payments. Machine native payments need programmable money. The programmable money winning is today stablecoins, but it's going to be tokens. Stablecoins need settlement rails. Settlement rails need blockchain. Okay. I'm not leaving. I managed to weather all of this. And I'm staying for the next leg. Let me know in the chat if you are too. I mean, probably one project that is worth mentioning that might actually be a massive custodian of this is actually ICP, which is finally, after ICP has probably been around for as long as I've been around. And effectively, I mean, I read this, I don't know if, like, I haven't verified it, but it says Solana and Internet Computer cement their status as the industry's highest throughput leaders, processing about 7.23 billion transactions in July. You know, maybe ICP also has finally got a product market fit, which they've been trying for so long. Many products will have a product market fit now that the machines are starting to take over. Anyway, I'm Crypto Man Ran, as you know. If you enjoyed this, smash the like button, share it with your friends. Otherwise, I'll see you guys again tomorrow. Until then, trade well, my friends.